Hello, everybody. My name is Gavin, and welcome to GCRE TV. Today, we are going to be speaking with Glenn Esterson all about COVID-19 and how it's impacting his neck of the woods in the industry, or the CRE world, I should say. Glenn, hi, are you there?
Yeah, how you doing, Gavin?
I am doing well. Thanks for joining us today on the call.
Thanks for having me.
Glenn, thanks for coming on GCRE TV. We appreciate, you coming on board to support us. As you know, today we want to just have a little chat with you about COVID, what's happening in your industry, how is that impacting you, talk a little bit about what it is you do right now, so that the viewers could kind of know a little bit about what it is your business is all about, and then also kind of any little things that people should consider when investing right now, especially in your part of the world, which is mobile home parks. So, Glenn, the table is yours. I mean, how first of all, what have you been seeing happening right now with the current pandemic and your sector?
Well, we're kind of an anomaly right now for our tiny little sector of the world here, this manufactured housing industry that I'm in. We've often been kind of viewed as not a real investment vertical. In the last couple of years, we've really made some headway into showing just how amazing this industry is and how resilient this industry is. Back during the Great Recession, we were one of the few industries in real estate, one of the few verticals that was able to consistently push occupancy and push rent growth. And as the recession ended and we got into kind of full steam with the economy, people started noticing that we used to be what was referred to as a 10 cap industry. Always, every park you're going to buy would be around a 10 cap. And nowadays we're consistently trading around a 6 cap, and that's pretty impressive growth from a valuation standpoint. And the difference is the amount of buyers entering the world, coming from apartment sectors, retail sectors, industrial, and looking at our industry as a very safe, resilient model to be invested into, considering that we are the cheapest, most affordable housing in the United States, by a significant amount. Our average lot rents in the South, are between $300 and $400, and around the country, it's probably $300 to $500 for most of the country, and $500 plus for some of the major markets.
Yeah,
that's extremely cheap considering how apartments are going and how some of the other areas that residents would live. So for us, in this downturn, this COVID downturn, everybody was expecting just all heck to break loose and for us to be significantly impacted. However, just like in the recession, we were able so far. I mean, we're only 6 months into it, but so far our collections are on par with our collections from 12 months ago for most markets. I mean, there's obviously some markets that aren't performing so well right now, especially in sort of the rent control states and things like that. Some of the lower end parks are still having some impact from this, but still doing better than their counterparts in apartment housing. So when we look at this, we're seeing that our industry actually is moving forward. Right now, we have more transactions than I could imagine. I mean, I have over $100 million worth of parks under contract right now, and that's pretty significant. We're not seeing people hedge right now on pricing. The people that know this industry are being more aggressive and seeing this as a real opportune time to pick up more affordable housing and to add that to their portfolio to help hedge against some of the other models that are actually having much harder collection issues. So from that standpoint, we're looking good, and we're seeing valuations grow, and we're seeing transactions grow, and we're seeing velocity in transactions grow, which is very significant. Not too many other verticals can say that right now.
Yeah. So if I hear what you're saying right now, the pandemic, it hasn't had an impact in your side of the sector. Is kind of actually booming for you right now.
Yeah, it's actually, I mean, we've had some impact, like our cap rates didn't compress as they normally do when interest rates drop. Okay. And with the Fed dropping the interest rates to many deals below 3% right now, we're at, normally would be chasing that interest rate with, a certain amount of spread between that and the cap rate that we use. We've more or less left that cap rate alone, and that lower interest rate is actually providing more spread for investors right now. And that spread is really what's attractive for the people coming from non-manufactured housing sector, especially the apartment sector, the stock world, all that kind of stuff. And we're seeing a lot of capital move into this market that wasn't here before. And COVID has only accelerated that, for our industry.
Okay, cool. And just to give the audience a little bit of an idea, what it is you do, because you're part of the Marcus Millichap team, but also you have another company as well that you
Correct.
do. So can you explain a little bit about your team and what it is that makes you guys so unique in that sense?
Sure. So I'm gonna rewind a little bit and just kind of give a little history here. I got into real estate and manufactured housing nearly 20 years ago. I bought my first, manufactured community back in 2003 or so in the middle of nowhere of Eastern Tennessee. And I cut my teeth on that. And while I was doing that, I was brokering apartment buildings, mostly low income Section 8 type of housing, doing rentals and selling small buildings and things like that. And so, eventually one day, I got good at what I was doing, or at least I like to think I got good at what I was doing. And a year or so ago, Marcus Millichap, they're a public company, a fabulous company. Some of the best real estate minds in the brokerage world exist within our company. And they asked me to come back to them. I'd been on doing my own thing for a few years and had worked for them many years prior, and came back to start a national team focused on kind of the Southeast and East Coast and Sun Belt type of markets. And so during this whole period of time, I had also been running an advisory company called the MHP Expert. And with the MHP Expert, we just provide free advice to anyone and everyone that wants to listen to what we have to say about the direction of the market, and our evaluations that we give our park owners and our prospective buyers. We I evaluate over $1 billion worth of parks a year. It's insane how many evaluations we just in an average week or month. And we do those for free for our clients, and we help them understand the trends in the market. And everything we do is kind of based off of verifiable market data, trend reports, things like that. And then, of course, 20 years of experience with me doing this, and my partner, who I couldn't be doing this without, a gentleman named Charles DeHart, who's hands down one of the most brilliant minds in this industry when it comes to understanding operations. He's also a former owner. And this excellent team that I put together with, some really great guys fresh out of college, and some guys a little bit more senior, and we're doing a bang up job right now. And we've been closing an average of a deal a week, or 3 to 5 deals a month, and doing it nationally. I think this year we've closed in 13 or 14 states so far, and we're looking at just accelerating that fast forward considerably here over the remainder of this year and into 2021, because right now is the opportunity it's probably the last great opportunity for MH investing, because we're not a 10 cap world anymore, and we're quickly not becoming a 6 cap world as we enter into kind of mainstream investing. And what we're seeing is this is the safest bet in town. And come good markets or bad markets, people will always need a place to live, and being the most affordable housing option on the market really provides us a lot of security.
Okay, that's good to know. Thanks for sharing that. So if anybody in the audience would actually like to know a little more about RV parks or mobile home parks, Glenn is your guy to go to. And Glenn, with the whole pandemic now, they say we're going into a second wave coming into the autumn. Like, what is your predictions for the future? What do you think is going to happen, or what do you see happening in the future as we go?
Yeah, I love this question because I get asked it like every day. But I'm not a crystal ball. I have no idea what's going to happen in the future. But I can tell you this: you will always need a place to live, and we have a hierarchy of needs. And in that very bottom rung of our hierarchy, we need housing, we need shelter, and that's going to be paramount in how things move forward. The thing that makes this industry really interesting is the lack of available zoned parcels and the lack of interest in the majority of municipalities around this country to give the zoning for new MH parks, manufactured communities. If they're giving them, often they're making them built like a subdivision that stick frame housing or, typical single family housing would be built, and it's fairly cost prohibitive. So with the direction that I see this going, whether the direction changes in our government or whether we hit, full steam economy or depressionary economy, you're still going to need a house to live. And if we start seeing inflationary times, one of the safest places to put your money during inflationary times is with cash flowing real estate. It's one of the best hedges out there. Plus, with the Fed saying that they're going to keep the interest rates artificially low, and they have a new program to hedge against the inflation that they're prepared to absorb, it's going to further accelerate your ownership in MH. And now with tax strategies like cost appreciation and these opportunity zones that are out there, and a lot of mobile home parks are in opportunity zones, guys, and that's just so much extra bang for your buck. I think for the next few years we're going to perform very well. I do not see us returning back to the 10 cap days. We're doing deals in the 4 cap range in all the major cities right now. So I don't see it decompressing that much. I do see it furthering, and I do eventually think Congress is going to have to take up some initiative to help with affordable housing in this country. At which point, maybe we see some overbuilding in our country, but I don't think it's going to be in the next cycle or so. I think we're still a good ways out on that.
Okay, cool. And with regards to sort of investing in mobile home parks, for sort of the beginners or for like the advanced people, is there any kind of tips or tricks or hints that people should consider when investing with these or looking to invest, especially with what you've been saying that's been happening right now in the pandemic and also going forward?
Sure. So, my team, we're kind of a shoe for every foot type of team, meaning, like literally right now I'm closing a deal in Charlotte for $340,000 or something. And, we have a $48 million contract or park under contract in Florida right now. And we've recently closed a $32 million deal in Wyoming, so we cover the gamut. So from the first time buyers, guys, this business is so hard, and don't just jump into it thinking you're going to just get rich quick, because it just doesn't. It happens, but it doesn't happen often, and it's not the expectation I would be setting for you as an advisor. And if you have anybody in your circle telling you something opposing to what I'm saying, I would get a second, third, fourth opinion on how hard this industry is, and I'm happy to provide those resources. I've recently written a book. You can't really see it in the background there. It's called the Mobile Home Park Manifesto, and it's the good, bad, and ugly of investing. There's no fluff in it. It's $20. That's a great resource. There's also some great workshops out there that people do, and they can cost you a few grand and something around that margin, and they're excellent resources too. There's lots of great information on the internet with LinkedIn and Facebook groups that will give you tons of free information and not too much upselling from the guys that are doing that. But I would suggest, getting very familiar with this. I've seen so many clients lose their money in this business and call me 3 to 5 years later saying, help, get me out. And then if you're a very seasoned, operator, and you've been doing this a long time and you know what you're doing, and you see what I see. You're either, gung-ho on pricing right now and buying what you can because that supply is limited, or you're sitting there saying, I can't compete anymore. Maybe it's time to start selling my portfolio. Because if you can't keep adding to your portfolio and you're not a permanent long-term holder, then, it might be time to consider, taking the top of the market, which right now we are at a top of a market, but we're not at the top for the rest of the market, in my opinion. And you might want to consider getting an evaluation and seeing, what can be done from a sales standpoint.
Yeah. So that brings me, actually, I have another question I'd like to ask then. With everything that's going on right now, would you say now is the perfect opportunity, or is it the good old saying where there's always an opportunity to be had?
Yeah, you know what they say. It's the only better time to buy real estate than today is yesterday. And, I mean, I think often of New York City and Miami back in the 70s and 80s, when I was just a wee kid. And I lived in South Florida back then. And I remember it was crummy down in Miami. And everybody's like, oh, it's overpriced and overbuilt and nobody wants to be here anymore. I mean, I'm sorry, but this last 30, 40 years, things have changed and they continue to change. And I always see the values going up. Now, of course, if you're in the middle of nowhere in a city that's shrinking, that lost all its industry, yeah, you're probably going to have more of a challenge. But, if you follow the number one rule of real estate, location, 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 you're probably going to be all right. And if you have any kind of grit to you, you'll be able to figure out the learning curve and probably make a buck or two and probably exit looking like a genius, even though you fumbled a lot in the beginning. And that's the real benefit of this industry.
Okay. And last but not least, when it comes to financing for mobile home parks or RV parks, like you were talking about, where does that stand right now? Is that funding really hard to get? Because I was on the call.
It's really hard to get. It's really hard to get financing for our industry. So, like for a lot of people, they're used to putting 20% down and getting, these amazing terms. And, you're buying a triple net deal. You might even get, a 15% down type of loan. In the mobile home park world, it does not work that way. It's 3 years ago, trying to finance a park was maybe one of the hardest things you'll ever do when it comes to your investing life. Nowadays, it's a little bit more friendly. Okay, we have more banks willing to do it, but there's still so many hoops to jump through. And depending on the type of park you're buying, you might be subject to a recourse loan. But if you buy a nice prim and proper park, something that could be financed by agency, Freddie Mac or Fannie Mae, chances are you're going to get into that deal during COVID right now with something like 30 or 35% down. And you're probably going to have an interest rate, around 3%, which is real nice, and a few years of interest only. But that's the creme de la creme stuff. And, for the average Joe that's looking at their first park for $1 million or somewhere around there, the lending's very hard, 25 to 35% down minimum, probably 6 to 12 months of reserves at times, depending on who you are and where you are and what your experience with this industry is. And your interest rates are going to be up in the mid 4%, and your amortization rates somewhere between 20 and 25 years. So it makes the cash flow kind of hard to follow when the interest gets that high and you're trying to buy a park in downtown Charlotte for a 6 cap. It's you're going to feel a little annoyed at the process. And I would suggest that even at 4.5%, that's cheap money. And it's not always going to stay that way. And for your first park or your first couple of parks, as you go through the learning curve, if you're able to get debt on something that you can live with, it's probably worth taking and holding, and then always using a refinance in a couple of years when you have a bit more experience, and we can get you, a better loan because you've added value and you've got some, experience under your belt now with this thing.
All right, thanks for that, Glenn. We appreciate it. Do you have anything that you'd like to share with the audience before we leave today?
Guys, I'm here to be a resource. I couldn't care less if you use me as your broker. Couldn't care less. Okay. I mean, I do very well, and I'm very happy with my team, and we continue to make gains. But I do care about your success in this industry, and I will not tell you the fluffy, pie in the sky stuff. I'm probably the guy that's going to hurt your feelings more often than not and tell you that it's a bad deal and you shouldn't do that deal. I'm here to be a resource. You guys can reach out to us anytime. We have a team hotline. Somebody's always answering the phone, and if we don't, it's because we're on the phone and we'll call you back. It's 720-MHP, the number 4U, YOU. So 720-MHP4U. You can reach out to us anytime. We love helping the new guy. We love helping the guy who's been in the business for 50 years. We love helping people exit. We love helping people retain and refinance. We're here to be your first call and your top resource when it comes to figuring out this industry and helping us further this industry. We don't work with people that want to squeeze the tenants. We don't, work with people that want to jeopardize the reputation of our industry. We're here to further this industry, and we're here to create a safe and affordable housing market for all of our tenants in the United States. And we want to retain that. We want to help grow this. So if you're in the mindset of what we've kind of coined as an empathetic capitalist, we're here to help you, and we want to help you grow your business. Even if we don't actually, make any money off of helping you, we're here to help you. So give us a call, reach out anytime. You can find us on the internet at www.themhpexpert.com, and you can see what we have on there. And, from a brokering side, you can reach out to our team at EstersonMHCteam.com. And, we'll be happy to, help you on the brokering side, help you get the park purchased or sold or refinanced.
Well, there you go, guys. You've heard it live today. Glenn, the mobile home park genius and expert, as I call him, the number one in the US, and anybody who I would personally go to if I was looking for advice or to broker a deal in that category of a class in the commercial real estate world. Glenn, we appreciate everything that you've done for us today. We look forward to having you more on the show, and hopefully we'll do something on a more different topic next time. Possibly, maybe we could look at doing something on invested in mobile home parks, like the 3 things to consider, if you'll be open to that.
Absolutely. I'm happy to tell you all the ins and outs and the red flags and all that kind of stuff. So, Gavin, thank you so much for having me on here. I'm really excited to be a part of this, and help your investors learn about a new niche.
No problem. I thank you for your time, Glenn, and I'll speak to you soon. Take care, everybody.